A good day to all of you. So this is the ninth session in the series of fundamental and technical analysis conducted by SC Securities. So today we are going to discuss about trade setups with indicators, which is an important area in technical analysis. And as always, our technical guru, Mr. Saliya will guide you through carefully across this area. So it's an important area, and I hope this session is going to help you all in your future investment decisions. And I'll hand over to Saliya. Saliya, over to you.
Thank you, Charitha. Welcome all of you for the ninth session, and it's a pleasure to share with you all today's subject, and it is regarding trade setups. The reason as to why we have mentioned that we'll be including indicators is because now that we have gone through some of the basics, or rather some of the basic indicators, at the same time very important indicators which will be useful for us to go ahead and start moving into the next step, where we will be able to start having a methodical approach. So now, as far as trade setups are concerned, I mentioned this as part one, but it's not going to be a follow-up. As time goes on, when we give you other aspects of technical analysis, we will be combining them and share with you another type of a trade setup. Primarily, a trade setup is actually the basic conditions you need to have even to consider a trade. That is the primary idea of a trade setup. You have to understand the basic conditions even to put your buy order. And sorry, any trade has to have a reason, and that's why you need to have a trade setup. Now, in the case of a trade setup, mostly when you develop a trade setup, you need to come up with a name for your personal trade setup. There are many popular trade setups available if you Google and if you browse the web. Here, since we have covered the RSI, I'm going to show you how you can use the RSI with some of the other indicators to develop a trade setup. Now, first of all, as the step one, you need to select the trend. In order to select the trend, we will be using the stock screener that is available in the investing.com. Thereby, we will be showing you how to access the investing.com for your benefit. Then we will be browsing through the list of the counters based on the RSI from the top from the highest values to the lowest, and we will be picking up, or rather, we can pick up from 3 to 5 stocks, or ideally, when we start, we can have a lesser amount of stocks. Then, in the case of the step 2, this is the important area to understand the trigger. This is where all these indicators and all the ideas that we need to get from those indicators will be looked into. First, we are going to load the charts in 5 minutes time frame. Now, just at the outset, I must mention that just because it's a 5 minutes time frame chart that we are using, that doesn't mean that it's a day trade. You will, when you start using a trade setup, you will understand, there are opportunities within a day as a day trade, but not always. Now, if you're looking at the ticker, and if you get to know information, stories about this stock is going up, that stock is going up, it's a different story, right? But when we are using a method to trade, it's all a totally different ball game. So at the outset, we need to understand that just because it's a 5 minutes time frame doesn't mean that's a day trade. If the data is low, select the 15 minutes chart. We can identify even if that counter is active. You will notice that the data available in a shorter time period is limited for us to work this setup to our advantage. Then after loading the chart, we will be loading the RSI indicator, and we will be drawing horizontal lines at 50 and 60 points in the RSI indicator. And then we will be selecting the 100-day exponential moving average, and also we will be adding the volume indicator. Now, first of all, the stock within that within the five-day chart, we will be going through the stock, and the stock needs to be above the 100 period EMA. Then the price needs to show a higher low formation. The next step, after seeing the stock above the 100 period EMA, the price needs to show a higher low formation. The lows have to start increasing. Then we will be looking at the RSI, and the RSI has to cross above 50 points and trend within 50 and 60 points. That is also I will be showing. First, it will cross 50 points, and then it's going to trend between 50 and 60. At that point, we are going to figure out the swing low and the we are going to figure out the swing low and the present high. Then we will be watching for the RSI to cross above 60. Volumes will increase at this point, but at the buy at the present high breakout. Now we are going to spot the present high. Once this RSI crosses above 60, we will be buying at the present high breakout. If you know how to put a buy stop limit order, it will be highly beneficial. That I'll be showing you how to put the, if you all don't know how to put a buy stop limit, I'll be showing that in a while. The third step is to identify the stop limit, and this is very important. Whether you are a trader, I mean, especially if you are a trader, and this setup is primarily for active traders, meaning from 11 o'clock to 2:30, you have ample time to make a trade. And as a trader, you need to understand that having a stop limit is very important. And in this case, a stop limit 1 rupee below the swing low is what we are going to do. To enter a stop limit order also, that is a sell stop limit order, I'll be showing you how to do that. Once the stop limit or price is identified, the next step will be the target price. And the target price is entirely your own assumption, your own target. And there is no hard and fast rule as far as the target is concerned. As an example, we will be using an ROI level or the resistance level. Then by looking at the stop limit or the stop price and the target price, we can understand, or we can figure out the distance between the reward and the risk. Reward and the risk ratio is always very important to understand. And as if a person who is interested in following technicals and become a professional trader, or a trader like a professional, then understanding the risk to reward or reward to risk ratio is also important. Then let's go with this to the next slide. Now here I have mentioned that there are important notes. Having trade setups are very important. As I mentioned just now, If you want to be a serious trader, a methodical trader, a trader with a system, then having trade setups are very important. But needs continuous practice and experience. This is very important. If you do not practice, you will not get experience. What happens in practice is that you will be learning from your mistakes. You will know what are the mistakes are, and then you will be able to understand how to get out of them, and that becomes your experience. Then the practice and learning from mistakes are very important disciplines to improve, else the efforts are in vain. That is what I mentioned just now. Now with this, let's go to the chart. Now, first of all, I mentioned that we need to screen the stock. We go to investing.com. Then here in the investing.com main interface, you will see that there is a space called tools. In that, you have investment tools and you have stock screener. You go to the stock screener, then you have to select Sri Lanka. Thereafter, you have the criteria. In that, we will be choosing in technical indicators. In the technical indicators, we will be choosing the RSI. We are using only the RSI. And we will be, the minimum to the maximum is here. We are going to use the minimum as 50. Thereafter, you will see it is displayed over here. Then you go to the settings by choosing the icon like that and select RSI column as well. Then apply. Then you will get the RSI list. Then you will be taking the highest to the top like that. Then you have the list from the highest to the lowest up to a value of 50 RSI, 50 points. Now, you will wonder as to why we are going to choose the heavily overbought stocks, right? There are two approaches. One is you can pick up stocks which are above 60 RSI, or you can stick with the stocks which are right now is
Saliya, I'll have to excuse you for a minute.
Fine.
I think what you have shared on the screen is your PowerPoint presentation.
I'm sorry.
The investing.com site.
Sorry. Let me go back again. I'm sorry. I couldn't share it. Sorry. Give me a second. I'm sorry. So, okay, let's once again go through that. We select investing.com. Then we go to the tools. Then the stock screener under investment tools. Then we select the country, Sri Lanka. Then under the criteria list, we will be choosing technical indicators, pick up RSI. The RSI, we are going to have the minimum as 50. Then the list is displayed here. In the settings icon, we click on that, choose RSI and apply. Then we will be selecting from the highest to the lowest. Now these are the highest and goes on till goes on to the lowest within the 50-point range. Then, as I mentioned, you can have two two approaches. One is you can choose the most active counters, right? In the case of the RSI, how we can make use of the RSI for our benefit if we are traders is to make use of the situation where when the RSI moves above the overbought area, meaning above 70, that's where the action is happening. In other words, when you, I will take you through those charts. When the RSI moves above 70, crosses above 70, you will see a lot of things happen, a lot of activity, a lot of volumes changing hands. So that is an opportune moment for us if we are thinking of using this trade setup, right? Remember, this is 1 day, right? The RSI 14 for 1 day period. We will be using the 5-minute chart, right? So first we are taking the we screen based on the 1 day period values, and then we will be picking up as I mentioned 3 to 5 or to, you know, it all depends on our own appetite and the way we can control, but you know, 3 to 5 or lesser than that will be ideal for our you know, especially if you are thinking of you know, learning to trade with trade setups, right? It will be the lesser the better. So over here I'm going to pick some of these Taproban, Ambient, and CSD. These are the 3 that I'm going to pick up, right? Now this is all to do with trading based on the steps that I mentioned, right? Now, if we want to add the fundamental backing also into it, then it's up to us. We should be we should be avoiding these ones, because end of the day, if we don't see any fundamental backing for these stocks, by all means we can you know, stay without trading them. But as traders, since we are using the stop limit, and a trader is always determined to stop that trade if it is going against him, right? The only issue that a lot of people encounter is that when they don't stop the trade. So people who do not understand how to stop the trade, then they have to always understand their strategies, and you know, then they have to, one of the most important criteria that they have to use if they want to if their approach is that, is the fundamental analysis. Without fundamentals, don't get into a position. If you do not want to, or do not want to even learn stop the stop price, right? So here, since we are going to use the stop price, I'm going to use these 3: Taproban, Ambient, that is Greg, and Ceylan Development. Here, first I'll be taking Taproban. Then it will be CSD. Sorry, CSD. Then it will be Greg. Wrong stock. Anyway, so this is how, let's take the Greg itself, the correct Greg. Ambient Holdings. Earlier on also we mentioned that when you click on a stock, the page dedicated to that stock appears, and then you go into the technical chart, click on it, and you can enlarge it, and you are in the chart screen. Then the same thing that we will be doing for the other two counters. Enlarge. Then this one also, we will be doing the same thing. Enlarging. Right. Thereafter, we are going to change our chart style to candle. Now we are at Taproban. Then we will be using the 100-day moving average, 100 period exponential moving average. We will be picking up the moving average exponential. Then we are going to change the time period to 100. Now we are still at the day chart. We are in the day chart right now. Then we are going to use the RSI. In this, we are going to draw two lines. You go to the tools, click on the horizontal line, and at two horizontal lines. Then you can change the colors. I prefer to change the color to red. This also to red. And the top one, I'm going to change the time period by using the coordinates to 60. The middle one, I'm going to change it to actually the middle point, 50. As I mentioned, we are still in the daily chart. Now, by using the 100-day moving average, the rule here is that anytime when the price is above the 100-day moving average, I'm sorry, the 100-period moving average, or it is crossing above the 100-period moving average, that's when we are trading. But as I mentioned, this is the day. We're going to make use of the 5-minute chart like this. Okay, this is the 5-minute chart. Right, now we have what we want. We have the chart, the time period, then we have the 100-day moving average, then we have the RSI with the 50 and the 60 horizontal lines and the volume. This is what we want. Now, I mentioned that the stock has to be above 100 period moving average, even in the 5-minute chart. So that's there now. But let's go to the beginning of it. Let's start from somewhere here. At this point, the prices have retraced and gone below the 100-day moving average, 100-period moving average. The RSI you can see is below the 50 points. Now I mentioned the next thing is to see that the RSI is moving above 50, crossing above 50, and then trending within 60. Okay, trending within 60. At the same time, we are not going to take this trade until it passes above 60 and throws back. It goes up to 60, test it, that area comes down. While this is happening, you will see that the lows are increasing, and since the prices were below the 100-day moving average, 100-period moving average, it has gone above, right? It does not necessarily need to be always below the price, always to be below 100 period moving average. As long as it is above the 100 period moving average, we will be looking at the RSI behavior, right? The conditions in the RSI needs to be there, and also it has to be in an uptrending formation where the lows are increasing, right? Once we see that the RSI is behaving and then retest, or rather moving, crossing above 60 points, right, and throwing back or retesting the previous levels, what we really do is looking at how the prices are behaving. Right now, you can see there is a low here, low base here, and it breaks out, moves above, and then throws back. Right at this point, we will be figuring out. Now here the prices have rather the RSI values also have come down. We will be still waiting within that rule where the highs, rather the lows have to increase, having higher lows. So we are still intact. And we can see that there is a swing low formation here. Now, before this swing low formation, we can see that there is a high here, right? So this is the present high. This is the swing low. These 2 points we will be using to, this is a breakout. The price has to break out above this level for us to initiate the buy. The stop, we will be using the swing low to decide on the stop limit price, right? Thereafter, we can see after coming down, throwing back, when this is happening, we can see that there's a swing low, didn't come down below this low. So thereby creating an uptrend. Why it is important is because when the prices go up, if the trend is still bearish, then the chances are there for the prices to come down, even to break below this level, whether or not the prices are above the 100 period moving average. That is why it is very important for us to see that the high low formation is intact. Then we have the high. So you see that the prices are, rather the RSI is now again reversing and moving up, right? At which point we have already decided the price that we want to buy this at. That's at 810, right? And this, so to make things simpler, we are going to draw a horizontal line at 810. Exactly there. Now, idea is for us to, if we know, I will show you, idea is to put a buy stop limit order at this point. Okay. Right. So this is the 810. The RSI crossed above 50 points. The price moved or crossed above the 100 period moving exponential moving average, going sideways, picked up, crossed above 60, thereby hitting a high. Then the RSI drops, the price drops, but making a higher low formation, and also it's above the 100-day, 100 period moving average. Now at that point, we will be putting a buy stop limit order, right? After this swing low is formed and we see a development here where the higher lows are still intact, right? We are going to, at this, around here only, we will be putting the buy stop limit order. The buy stop limit order is when we want to buy at a higher price than the market price. If you just put a limit order by using the limit order window, that order will get filled at the current market price, because let's say if you had entered a buy limit order, if you had entered a limit order at this area at 810, right? You have sellers who are giving at a lower price than 810. Therefore, your order is going to get filled. As such, we are not using the limit order window or limit order type. We are using the buy stop limit order. We'll go to the ATRAD. Then you have the buy. You choose the stock. Then you go to the order type. Once you choose the stock, you go to the order type, click on it, go to stop limit order. When you go to the stop limit order, you will see the stop price. First, you have to concentrate on the stop price, then this price. This is called the stop price, and this is the limit. Thereby, you have this name, stop limit. Stop is this, limit is this. So our price is 810. I'm sorry. Our trigger price, the stop price is 810. We are going to give a margin, a higher margin of 10 to 20 cents for the limit. That means from 810, I will be entering 830 here. So our intended price, a breakout price is 810. So we put the 810 at the stop price space, right? The limit is 830. The reason as to why we give this range is because once we enter this order, the order commands the system to open or queue up the order at 810. At which point, maybe at the time that we are entering this order, it is below 8 rupees and 10 cents. Let's say at 750, right? In this case, let's take the chart itself, right? This is 810. Let's say around here after this swing low formation. Now this is a 5-minute chart. So within 15 minutes, we know whether there is a swing low formation, right? So at this point, this is at 770, a range between 770 and 780, right? We go in and enter the order here. So when it was at 780 only, we are putting this order. So we are telling the system, you take this into the queue only at 810. But you should not exceed 830. So within 810, if there are no sellers, right, it will go up to 830 and fill the order. That's the idea. That's the command that we give by using the stop limit order. And this is a buy order. So it's known as a buy stop limit order, right? So we do that. Then enter, it goes in. It works. I have done that. It works every day, right? So that's a buy stop limit order. So we know our buy price. Okay, the entry price is that. Then the next thing that we need to understand is the target price, right? As I mentioned, it is all up to you, right? Whether it's on whatever the stories that you hear, right? Taprobane is going from this to that, stuff like that. Or otherwise, you can be humble enough to get a decent return on investment, right? Now, in the case of the decent return on investment on a trade, if you do not have fundamentals to back it up, meaning, there is a research report giving you a target for Taprobane of 20 rupees within 12 months or something, right? That type of targets are not there. And if you believe in that research report, right? Then you can rely on the research report and wait. That's a different strategy altogether. We are not here. This strategy, which is known as the RSI trade setup, doesn't have anything to do with that. This is a trade setup. It's for a trade, right? So because of that, you have to be aware that this could be a short, short lasting trade event. We don't know, right? The future we don't forecast when we move into a trade entry like this. Of course, there are other ways that we are going to analyze to project upper levels that we will be taking. I mean, we will be covering in the future future sessions. Right now, we are only looking at the buy entry, and then we will be looking at the ROI. For an example, right now you can see, okay, this is after executing, you see this and this level. But before execution, right, you can refer to the previous, if there are previous resistance levels. Now, in this case, we don't see any previous resistance levels, meaning the areas where the support was has failed and they have become resistance levels now. So that type of thing is not there. As such, we can make use of our own, we can make use of our own analysis, right? And I have shown this tool where you can have the price range to understand the ROI, right? Now, remember, this area is not visible. This is not visible, right? Therefore, we have to go with the target price. So, you know, you have to have your own system and then come up with your target price. Let's say it's a 10% target price. Now, the 10% target price has to be 10 plus two-way brokerage, that is 2.3%, plus 10%, that is 12.3%. So 10 into 12.3% will be 9 rupees and 10 cents, right? So that is our target, 9 rupees and 10 cents. Right, and especially when it comes to stocks where the prices are below 20 or where the prices are below 15 rupees or even below 10 rupees, the targets on a very strong market, right, of 10% or above can be realized. So this is where it is. Then you have to have your stop limit. Now that you have got the price at the price that you wanted, so the order is executed now, you will be wanting to have a stop order, right? Now this target price and the stop limit price, we work out after we enter the buy order, right? We enter the buy order, because otherwise we will be working out all these things and then sometimes we will lose the opportunity. Therefore, we put the buy order, then look at the swing low. And I mentioned 1 rupee below the swing low, but in this case, since it's a stock which is below 10 rupees, we can make use of leave a margin of maximum 20 to 30 cents for further to this present low, or otherwise you can keep it at the same price of 760. The low is 760. So let's assume that we are going to give a low of 760 here. Now, once we purchase this, we will go ahead as a trader. What we do is to put the stop limit order. That is a sell stop limit, not the target, right? Or when you see, okay, first of all, we are doing that. So that's an exercise we need to practice. You go to the sell order. The stock is Taprobane. Once you pick up the security, you go to the order type, change the order type to stop limit. Now it's a sell stop limit order. When it is a sell stop limit order, the stop price is what you have to put first. So I'm going to give 760 as the price at which as the price for the system to take this order into the queue. So we will be in the queue at 760. Then I give a little bit of a margin, as I mentioned, 730. Right, so between 760 and 730, this order is going to get filled. Now remember, we have put the stop limit order. That is a sell stop limit order, right? Now the prices are going up. Now the moment the sell stop limit, the price starts moving ahead, we know, right? We can increase this to this level if we want. Otherwise, we can cancel this order and immediately put a sell order that is a normal sell order, which is the order type is a limit. So we put a sell limit order at 910, right? So that way we have filled this order. We have executed the order, right? Now the reason as to why we are waiting within this 50 and 60 is because, right, at this point, we will understand how the higher low formation is going to take place. Number two, the volumes, right? You can see once it tried to move up above the RSI, tried to move up above the 60 points. You can see that the volumes also compared to these volumes have increased. But then there is a throwback. So we are waiting for the throwback. What if there is no throwback? It goes up, right? Then we don't take the trade. This setup, we don't take the trade, right? But of course, if as time goes on, you will understand when you start practicing trade setups, right? The next level that you will go into unintentionally with your own experience, with your own trials and errors, you will understand that you don't need to have like these rules in one sheet for each and every trade, right? You will understand that, okay, this is the setup that I'm going to go with it, right? That's why we come up with a name, RSI setup. So now see, when I was loading all these things, I didn't refer to the PowerPoint where I have described everything. So it's in my heart, or it's in my memory, right? So similarly, you will understand that not only RSI setup, there will be many other setups that you have developed on your own. And you will understand, okay, this is the setup that suits this. Then also you will understand when you, as time goes on, when you get really accustomed, trained with patterns, chart patterns, right? You will understand how to project based on the chart patterns, right? When you understand how the Fibonacci retracement lines can be drawn or extension lines can be drawn, there are different trading setups, trading strategies based on that, right? So here we are giving a lot of time for this trend to build up, right? At this point, now we are giving we are giving some more room for it to go up and throw back. So that is what happened here. Went up, came down, right? And then again starts moving up, right? And the important thing is not the RSI, how the, the price is increasing, how the lows are increasing, right? And then the moment the breakout takes place, why should a breakout takes place for us to go in for a trade? Then only we describe the trend as an uptrend. The lows are increasing, then the highs have to increase. So while the lows are increasing, if this is going flat, then there is no point. And that won't happen if the RSI and the high-low formation is in momentum, right? If there is a momentum in this, and then we will be looking at the way the volumes are behaving, right? That's how you do this trade setup. Then again, the prices come down, then goes up again, throws back. I'm sorry, it goes up, testing this. Yeah, based on the setup, it throws back. At which point we know the high and the low. Then goes up, breaks above, and ironically, now it is at 910, the sale price of the previous trade, right? Volumes are increasing. You take a trade there. So that's why I said you need to keep practicing with trials and errors. Then only you will understand to become a methodical trader based on trade setups, right? So this is one. Then I will take you through the ambient, the same story, or let's have the ambient here. Now, when you are in a, or when you have developed a chart like what we did for Taprobane, immediately go and save it, give a name. Right, always you might be able to see that or these lines will be intact. So when we move into another stock, again we have to do the same thing, right? So two horizontal lines, one is at 50, other one is at 60. When you get used to having trade setups, right, you will realize that over time you will be able to develop a setup which can combine all the experience that you get out of many setups that you are coming up with, right? That also with knowledge, with experience, with increased belief, you will be doing that, right? So today I saw something interesting happening at Greg. See, the RSI fell, started moving up, went and tested this level, right? So at which point we know there is a swing high here, even swing high here. So you have a swing high, you can choose one of the two, because you can see that the RSI tried to test 60, came down. So that is here. So you basically have a swing low here. After the wave, you have this swing low, right? Either of this you can target, either of this, right? And then you wait. The share is like still developing, and you can see that there is a lower high formed here. The lows are also it has increased, but it's going flat. At this point, we have another swing low, another swing high, or a present high, right? This is the present high compared to this. So this is at 41.40. So you go ahead and pick that 41.40. And you repeat the same thing where, okay, you identify this as a swing low. That is the swing low. This as the present high or the swing high that you are interested in. Then you go, soon as you figure out that the move is there, or rather, you know, there is a high low formation. At this point, you go ahead and enter an order, which is a buy stop limit order. Select the stock, change the order type to stop limit, go to the stop price, say 41.40, give a premium 41.60, then enter the order. Thereafter, you know that your stop limit is this. If you had figured this out, right, then you can okay, I mean, you can wait for the 10% return or 5% return, or you know, some realistic return. At the same time, you will realize that if you realize certain percentage returns, right, in the shortest period of time, then you can organize as to which level is realistic, which level is practical. Sometimes it varies from stock to stock, right? So that also you have to fine tune based on your understanding by following. And then you see this, if you take a gain, which would have been a day trade from here to this high point, that's a 6% return for the day, right? So you can that is, you know, if you're talking of you know, leaving out the brokerage, might have been about 5%, a little over 5% return there. So depending on your you know, return, you can target your selling price, right? So that's how we come that's how this trade was executed. And you know, the same when you practice the same thing over and over again, then obviously you can fine tune your method. So RSI you can use, I mean, when you're using indicators, there has to be a process, there has to be a methodical system when you're using the indicators. We just don't use the indicators just to weave what is happening. But when we are taking a trade, trade setups are very important. So, you know, I would encourage you all to practice that. And if you all have any questions when you are trying to practice it, let us know. We will be able to help you. And with that, I will leave or open the house for you all to, you know, ask any questions if you have.
Right. Thank you, Saliya, for that excellent presentation. So that brings us to the end of today's presentation. I hope that it was quite useful for all of you. So as Saliya said, we will be opening the floor for any questions that you may have. And we will officially end the presentation now. Are there any questions we can take, Saliya?
Seems like nothing, Charitha.
All right. So thank you everyone for joining. As always, we are more than glad to help you with whatever the training needs that you all have. So if you have any questions where we can be of any assistance, please feel free to send to us. You can basically go and comment in our YouTube channel, and we would be happy to help you. So thank you for joining, and we'll meet you again next week.